Our job for this year is to drill those holes and see what we have and to market the story. There's two outs on it, right? We could have a good high grade hit and show there's more tonnage in the historical zone. Or if we connect the two and have some meaningful low grade at depth, then I think we're well positioned to work on that as well.
But I want realistic conversations about the real outs, not the hopes and the dreams and selling it big, but what's this kind of plan to move forward. Hello and welcome to Crux Investor. First of all, thanks so much for watching the video. If you like it, give us a thumbs up and do remember to leave your comments below. Best comment of the week gets a Crux Investor mug. Also, if you haven't already done so, please subscribe to our YouTube channel by clicking the button in the corner of the screen. And of course, if you want to see more videos like this, click the notification bell. We spoke earlier today to Simon Dyakowski, who's the CEO of GSP Resources. They're a Canadian explorer focusing on PGM in BC. They have a small project there called Olivine, which didn't quite work out and didn't deliver what the market needed. So they have resorted to a small farm out option. We'll see how that plays out. They've also identified a project called the Alwin, which is a copper play. That's also in BC, and he talks us through how they hope to develop that. They're going to need to raise $1 to $2 million. They've only got $300,000 in the kitty at the moment. Fairly low G&A, so if they can do that, that might get them through to the end of this year. We talk about strategy and hopes for the future and exactly how they plan to position themselves in the market. Take a look in the description below. We discuss a lot of topics in there. If there's anything that interests you in particular, you can click on that timestamp. That'll take you to that part of the video. But let's hear what Simon had to say. Hello, Simon. How are you?
Hey, doing well. How are you doing, Matthew?
Surviving, Simon. That's what I'm doing. literally holed up like a nuclear Holocaust victim. But doing lots of jigsaw puzzles as well with the kids, which is also another reason why this thing has got to end. Right. So we caught up in December 10th. Actually, you had quite a good run. You were like 25 cents. When that video came out, you went up to 42. It's come off a bit, and obviously the market reset. You're back down at 10. But let's talk about what life in a normal environment could look like for you. So kick off with a 1-minute summary to remind people, what you've got, and we'll pick it up from there.
Yeah, sounds good. So we're a southwestern BC focused exploration and development company. So when we last spoke, we'd been working on our listing project, a prospective grassroots project in southwestern British Columbia, about 35 kilometers away from the Copper Mountain open pit mine in Princeton. So we did some initial scout drilling there, generated some further exploration targets, had some interesting results, nothing that blew the market away. But as we're a brand new company, we've only been trading for about a year and a half, very tight capital structure with 12 million out. We're building out our asset base. And last fall, we were poking around at other projects, and we've acquired our second project now, an option to acquire a past producing copper mine, also in southwestern British Columbia, keeping in that focus. A little bit further north, it's just about 50 kilometers outside of Kamloops, British Columbia, as a point of reference, and it's sitting in the shadows of the Highland Valley Copper Mine, which is owned by Teck Resources. And our current plan is to continue working on our first project, the Olivine Mountain, with a partner company. But our corporate focus will now shift to the Alwin Mine Project, which is the new asset that we have. And in a normal, as you mentioned, obviously not in a COVID-19 world, but in a normal world, we would have been looking to start drilling sometime late summer. So the permitting process in British Columbia is a little bit more onerous than in some other jurisdictions in Canada. So we were expecting about a 6-month process, which we initiated in February. So who knows? Maybe by July, August, we'll be back in that normal world and we'll be on track as if nothing happened. But in the meantime, okay. We're quietly working away from home.
Okay, great summary. So let's pick that apart. Okay, so you were working on the Olivine project. You drilled, didn't get the results that necessarily you wanted or allowed the market to react. You changed business model there. You've farmed it out effectively. So tell us the structure of that deal.
Yeah, so it's an option for the other company to form a 60-40 joint venture with us in 4 years, should they spend $250,000 on the property, pay us $250,000, and issue us some shares. So in the first year, it's about $75,000 in work. We're the operator, so we've come to an agreement that we'll do some more ground level surveys and refine some drill targets before we decide if we want to go in and drill test some of the other targets that we didn't test in the last program, or some new ones that we come up with.
Okay,
so it's a modest option.
It's a modest option, and what are they or you going to be able to do with that money in reality?
Well, I think we have it's about a 3,000 hectare land package, and when we spotted our initial drill targets, we only soil sampled about a third of the property. And our drilling did encounter some low-grade copper mineralization to the north. So our team was recommending that we expand and tighten up the grid up to the north near the, it's called the ASP14 showing, where we did encounter a narrow copper vein to see if that carries for any distance, to see if that would be worth drill testing again. And then in the south, we actually have identified a palladium anomaly in the soils, a little bit further down to the south of the grid. So a few more lines of geochem analysis should help us determine if that's worth the risk of spending drilling dollars at around $175 a meter. So it'll actually get us quite a bit of information that should help us decide if it's worthwhile to drill again.
Right. Okay. And what do they hope to get out of it? Did they have more money behind them than that, or are they also operating on quite tight budgets?
They're a well-financed group. This company has I think it has sufficient money to go through the first year of the option, and it is a palladium target, so I think that's what's interested them. So we want some more data to be certain, but from the work that we did on our listing in 2018, there's a definite palladium anomaly that kicks up in the soils in the south part of the property. So I think with the uptick in palladium, I think even today it's trading over US 2,000 an ounce. That's what's interested people to look in. In British Columbia, I think is still considered a maybe it's not top 10 jurisdiction, but it's certainly a tier 1 jurisdiction. So there's some appeal there, and the ease of financing projects in British Columbia I think is also appealing. And I don't know if your viewers are familiar with this, but there's as with many mineral and energy exploration projects in the world, there's some very healthy tax incentives to fund exploration in British Columbia, particularly for residents of BC. So that's one of the reasons that you see so much exploration activity in British Columbia, even when the markets are a little bit softer. So right. I think that all made sense, and it made sense for us. And we actually did this deal after we picked up our new project as well.
Okay, no, I get that. What I'm trying to help our viewers understand is the thinking for teams like yourself go through to say, we tried this, didn't work, we're going to do this farm out model, but then you got to be careful about who you pick. But like you say, palladium's hot, right? And the brokers go nuts, and they ring you up and go, anyone got a palladium project, if that's the hot thing of the day, to be able to go and raise some money off the back of. So what kind of diligence did you do with this group, not just in terms of understanding do they have the cash immediately available to progress this, but actually we're serious about mining this?
It's a very well-known group that's, they're not fly-by-night promoters. They've had a series of junior exploration companies run out of Vancouver. So I've had knowledge of them for several years, and it all checked out.
Right. Okay. It's not just a fundraising exercise.
I don't think so. I mean, it's not a lot of money either. It's just whether they see it through or not isn't really a huge concern for me. I mean, we'd love them to. It'd be a great investment in the property, but getting new drill targets with a partner funding them would be great for us either way. And I should note that we spent $300,000 to $400,000, I'm not sure the exact number, on our drill program and our exploration efforts to date. So that's put our property in good standing now for nearly 10 years, which is the maximum in British Columbia. So we don't have to spend another dime now until 2028, and we'll keep control of the claim. So, I think it just made sense at the time to have somebody else come in, and we're very pleased that they were interested in the project.
Okay. Well, let's see how. I mean, I hope that works out well for you, and it's not a promote scenario. But
no, it's not. That's not for the shareholders. That's just an internal, an internal thing that we did to not waste what we think is a valuable project still.
Okay, and you think that the palladium obviously has been hot for a few months. I don't know where it is in the cycle. I don't know enough about palladium to sort of comment on that. You think that they're going to have time to actually keep the market interested about this palladium story or potential palladium story?
It's a very inexpensive call option to keep. If it does continue to be of interest, great. If the interest wanes and picks up in a few years, we're still going to have the property. So
you don't care.
That's how I'm looking.
Right. Okay. Fair enough.
Yeah.
Okay. You retain the data. The data is yours.
Well, we're the operator. We retain the data. If they don't exercise the option, we keep it. If they do, if they have success, then we still have 40%. So I didn't see it as a huge gamble on our part.
Fair enough. Let's talk about Alwin Mine Project, the new project. That's copper. A bit more excited by that, are you?
Yeah, I mean it's it's a bit more of an advanced project. I mean it has had production. In the last century, it had 3 eras of production, and it was actually the first mine to be mined in the Highland Valley around the 1890s was when first production happened there, and the old timers were mining high-grade copper out of veins from surface. And that operation became a little bit more sophisticated in the 60s when an underground mine was constructed and operated for a few years in the early 70s. Shut down due to low copper prices, reopened in the early 80s, and then shut again, and then has been worked on in the mid 90s, and then again shut down by low copper prices. But we have, through all the work that previous operators have done, we enjoy, a wealth of historical data that they didn't have access to. So, I've taken possession of all they're all paper based, which is interesting, but boxes and boxes of drill core, engineering studies, geophysical studies from all previous operators. So we're in the process right now of digitizing all of those, putting them into a model. And our game plan is not to reopen the old, smaller, high-grade underground copper mine, but we're looking to drill deeper. And some of our consultants and past operators have suggested that we might be potentially sitting on top of a larger porphyry. And to date, nobody's drilled deeper than around 200 meters below surface on our claims, looking for that porphyry target. So that's our goal, is to do a deep hole or 2 this summer, and then to reconfirm some of the drilling in the old high grade zone to see if that could have some larger tonnage potential at perhaps a lower cutoff grade. Looking at it from maybe an open pit perspective, whereas previous operators have been drilling high grade underground, very small scale mining around 500 to 700 tons per day.
Right, and to do that, you're going to need money. Where's the money coming from?
Yep. The money, I'd say we have enough money in the treasury right now. We have, it's not going to sound like a lot, but we have nearly 300,000. We could certainly start our drilling operations, should we get permitted on time with that. And then, the cost for us to drill core drilling it's around $175 a meter where we're located. So, it would likely necessitate a small equity raise, but I think we're in, we're well positioned with our share structure, which it's only 12 million outstanding completely right now. But the free floats, the actual shares that are out there in the market, there's only about 5.8 million. So, those are unique features to our capital structure that, other companies maybe don't enjoy. So, if we do have to go and raise another $100,000 to $200,000, we'll likely be able to do that. And if not, if we can't raise money to do that, then I think the whole world's in big trouble, because it's a pretty, in my estimation, it's a fairly low risk drill shot for a company that's structured like this.
But you would have said that about your first project, wouldn't you?
Said what?
That it's fairly low risk, low cost.
Yeah, I mean, it's low risk in terms of the capital structure. I mean, it's not, granted that one was a higher risk from an exploration perspective, grassroots, scout drilling, absolutely, that's higher risk. But what I'm saying is it's not the kind of project where you needed to spend, $1 million to get a really good look at it, right? We were able to get in there for, I think the entire drill budget last fall, not the entire history of work, but it was around 200,000. So yeah, I mean, it's not an insignificant sum, but it's not, it's not like operating in a remote part of the world where you're, using helicopters and building remote camps and spending many months in the field. That was my point on it being lower risk than other lower like a lower funding risk, I suppose. It's a better way to put that.
Right. Okay. I'm just trying to get an idea of your thinking here. Like, so would you? Hindsight's a wonderful thing. We love hindsight, right? So hindsight, should you have gone for the farm out model first time round, or do you think that the excitement of the potential?
Sorry, I didn't catch that. Which model?
Your model, like what your business model with Olivine, do you think you should have gone for the farm out model day one rather than try to kind of score big yourselves?
You know what? No, I with hindsight, it would be easy to say, I don't think we should have done that, but I don't think I would have done anything differently. Just because, the way the company was listed, we were obligated to work on the property that we listed on, and we were, genuinely impressed with the results that we saw through the initial phases. I mean, the property had never been drilled before. Last time we were chatting, I mentioned how, the region is a prolific PGM region, one of the few in the world, and one of the creeks that hosted several thousand ounces of alluvial platinum in it, it does run through, the headwaters are still on our property. So, perhaps we didn't drill in the right area, but that story is still intact. And no, I wouldn't have done anything differently. Like, obviously in hindsight, looking at the stock running ahead of itself, I mean, I think that was more of a function of the low float more than anything. I mean, it's like I mentioned, it's 5.89 million in the free float now. And back then it was less than that. So some more shares have come out to the market, but you get a story out there like that, I don't think it matters what it is. If it's in the right mining market with not a lot of shares out against it, it's going to run. So, I wouldn't have done anything different. Had this property have been available last year, perhaps, we would have got it earlier, but it wasn't. And I've had my eye on it for a while. And the reason that we had to wait to get it was because it was, it was a consolidation of claims that our vendor was working on.
So help me understand. Yeah. Help me understand what you've got with this copper asset, because I think corporate structure is important. Low share count is important. Not so low that there's not a lot of free trading stock or that it's not very liquid. Yeah. But what you fundamentally need is a really good, solid asset with a solid project plan as to how you're going to share or show the market that you can create value around this asset. So tell us a little bit more about it. As you say, it's a kind of postage stamp type plot surrounded by all the right names, but how do you take it from high potential and actually deliver?
Yeah, that's a very good question. So, that's what we're going to hopefully accomplish in our phase 1 drill program this summer. There's really two aspects to the property that we like. We like the high grade copper zone that has historically been mined. And we've noticed that previous operators had not, they hadn't assayed all the core from surface. They hadn't considered it to be a smaller scale open pit operation. So, we do know that there is a lot of high grade tonnage left there. We have the ore blocks from the old engineering studies that we can confirm that they haven't been mined out. So, we're going to modestly invest into a few drill holes into that high grade zone to try to build a new resource model there that could suggest, good economics, even at a small scale as an open pit. So that's kind of plan A. And then the plan B, as I mentioned before, was to drill these deeper porphyry targets. So, I mentioned that we're in the neighbor in the neighborhood of good names. Well, we're a little bit closer than that. It's kind of like a townhouse being next to another townhouse. We're within 1.5 kilometers of the western pit wall of 160,000 ton per day porphyry copper mine. So I think, and this is a little bit down the road, but if we do have success drilling a deeper target, and if we're lucky enough to get possibly the extension of that, then that could open up some value for our shareholders, right?
What does that mean?
Plan 1B.
What does that mean?
Well, I mean,
if someone comes in from next door and says, actually, slightly inconvenient to have you here, we'll take you out. Is that the plan?
I don't know about that, but at least, if you get a porphyry intersection, a lot of people will they're very expensive mines to build, massive capex, billions of dollars. And there's, British Columbia is kind of notorious for this. There's a lot of interesting low grade hits of copper and gold, but the market is dismissive of them because it's very unlikely that they would get constructed as greenfields projects. But I would consider ours, and we don't have the result yet, but let's say our drilling yields some success, it would be more of a brownfields project. So I think we'd get re-rated for that. And obviously I can't really speak for what any of other companies' strategy would be, but I'm sure they would look at it at that point.
Well, that's what interests me, is if you're setting yourself up for that, and this is the first of this type of model, because you're not going to have a big capex build out on a be honest, relatively small asset like this. It would not make sense to laden the company with debt or, quite frankly, dilution. It really is a target for someone else, but you've got to set yourself up for that. Do you guys know what you're doing in terms of being able to do that?
Yeah, I believe so. And I mean, since we last spoke, we have added a porphyry expert to our advisory board. So, a gentleman by the name of Greg Dawson, who's been, he's a career geologist who's, worked on a lot of porphyry discoveries. And so he's now associated with our company on the advisory board, and he's going to help us through our project. We've engaged an economic geologist as well, who's modeling up the historical data. So we've really bolstered the technical team. And yeah, I mean, in terms of building a mine ourselves, not at this point, but it really depends on what we get out of this drill program. And it's if we do get some high grade near surface copper mineralization, then we can certainly look at our options with that as well. So that's kind of, there's two outs on it, right? We could have a good high grade hit and show there's more tonnage in the historical zone, or if we connect the two and have some meaningful low grade at depth, then I think we're well positioned to work on that as well.
Yeah, well, this is what I'm trying to get at with companies, and especially small companies like yourself. You're just over $1 million Canadian, aren't you? You've got not a lot of cash. You feel you can go and raise $1 million to $2 million bucks, which would be great, and your corporate structure is good. But I want realistic conversations about the real outs. Not the hopes and the dreams and selling it big, but it's nothing wrong with being a project finder, project generator, project developer, and be known for that. There's nothing wrong with that. That's a great business model. It works. You can generate a huge amount of value. But I want you or people I talk to explain to me, investor, and all of these people watching it, what you're trying to do. Do you acknowledge that? And if so, what's this kind of plan to move forward? Because I imagine if that was the case, then you probably want a line of these things, right? So talk to me about that.
Yeah, so I mean, we're cognizant of what we're trying to do in the context of our valuation and our expertise and our capabilities. So it's really one step at a time for us, right? We've acquired a project. If the full option is exercised, I think we struck the deal at when our share price was around 15 or 20 cents. So, all told, it's about $1 million to acquire the project, using that valuation for the shares that we issue and the cash that we pay. If we can turn around and make it worth $5 or $10 million, then I think that would be a big win for a small company like ours. And conversely, there's it represents good optionality, right? So I don't want to sit here and tell you that I'm going to engineer a plan to ship ore from our project to a nearby mill, but maybe I should point out that there are 2 nearby mills within a 45-minute drive of our asset that aren't part of the Teck Highland Valley complex. There's the new Alwin Mine in Kamloops, and there's the Craigmont mill in Merritt, BC, which are within a 45-minute drive, and could potentially mill the material on our property. Not saying that we would do that, but perhaps somebody else might be interested in that. And there's precedent for that, because there is one of the previous operators on our project, a company in the mid-90s. They had a toll milling agreement with the Alwin Mine, and the reason that they actually walked away from the Alwin Mine was because the names are similar here, but the Alwin Mine temporarily shut due to low copper prices in 1995. So they had no agreement anymore. So it's interesting how Alwin and Alwin have that connection. So yeah, I mean, there's certainly other players that could be interested, or there's a number of different ways to skin the cat, I guess, what I'm trying to say on this one. But our job for this year is to drill those holes and see what we have, and to market the story, and then to decide with the new information that we obtain, what the best course of action is for our shareholders to make money. Great.
Okay, that makes sense to me. The team you mentioned a few new names there. Porphyry expert. Your old man still involved with this?
He is. Yep, and he's actually worked on this project before, so that's how we identified it. But when he had it about 15 years ago, and it's interesting. You never know what you get until you get the assays back, but they did drill it 15 years ago, or 2007, so 13 years ago, and they had some very impressive numbers. Actually, they did encounter some high grade copper in some of the diamond holes that they put down. So again, we've got some interest in following up on that as well. So there's a good kind of knowledge of the project within the family.
Good. Okay, well, I guess you're looking forward to working at what you've got in there. You've got to raise some money first, go work out what you've got, try and understand, back of an envelope type economics to this. But that's exciting. I wish you well.
Yeah, thank you. Yeah, we're very excited. We're looking forward to the COVID crisis subsiding and everybody getting back to normal, and hopefully that times well with permitting for us.
Well, I hope so. I mean, stay in touch. Let us know how you're getting on. I like this sort of development of this. It's a potentially, if you're able to identify more assets, it could become very interesting indeed. Well, look, thanks for your time. Have a great weekend. I know you've got a full day ahead of you now. I'm literally raring into the weekend about 2 minutes after I hang up from you. So good to speak to you, and I'll see you again soon.
Great. Thanks very much for the time, and have a great weekend as well.